This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio.
So what happens, Keith, if people figure out that the GDP number is going to be a miss on Thursday? Well, then that probably means that we can sell some gold versus where we bought more last week, lower. Probably means we can sell some more bonds today because people are freaking out about it. And it probably means on GDP day, we're going to have a much different size position because we're not rookies on the job. We don't think that the whole book moves on that day. We understand the discounting mechanism. We understand that it's not just discounting it this week versus where we made all those additions on Friday. We understand that it's 16 months of discount. So on this in particular, I went through this surgically and mathematically in the early look, and I had Drago on the call this morning going deeper dive detail on the model. Our model is as sophisticated and proprietary as any model on Wall Street on this one, okay? You can't steal it. You can't pretend you can recreate it. You know, that's a real important model, okay? But we also understand that it's not just about that model. It's understanding what the market's giving you from a signaling perspective to gross your positions up and take them down. On D-Day, if this number is literally, and I'll go through it maybe in the Q&A, if we have it wrong by 20 or 30 basis points, which is typically what we'll have it wrong by, you know, the standard error, tracking error in the model, that's not going to change our positioning. No. This is a Q1 number, and we're a third of the way through Q2. Okay, so when we're starting to talk about what's really being priced in, the easiest call to make now for 16 going on 17 months is at the lowest part of the quad 4 pool, even if you had a very narrow quad 1, monthly quad 1 in January, is in the second quarter, don't forget. So, okay, those are your top three things. Again, put simply, if we are at the low end of the range, which by the way is a higher low today too, 334 you should have noticed on the 10-year yield, then I might take my treasury position down to its minimum. Oh, what's your... No, stop it. It has nothing to do with conviction of position. It has nothing to do with how big I went. It has to do with making money, okay? If you went big, then you deserve to get paid. You don't have to take the risk of doing the opposite of the 99% of the time, which is, again, at the low end of the range, you do the opposite of what I told you to do. Come on.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.